The cryptocurrency markets are going through a bit of a bear trend right now. Tell me something I don't know, Lark. Well, here's what I want you to know. You can still make money during this time. A lot of investors are just kind of in that, I'm so crushed, my portfolio's down so much, there's no way to make money, it's time to capitulate and sell at a loss and escape this market. But here's the deal. There are so many ways to keep making money in crypto, whether the market's going up or the market's going down. This market is overflowing with opportunities. So in today's video, I want to share with you how you can make money during this bearish trend within our wider long-term bull market for crypto, because these times tend to be times of great opportunity, and there's always a way to make money if you know where to look. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that's a topic that you would like to learn some more about, make sure that you subscribe to the channel, gently tap on the thumbs up button for the YouTube algorithm, and of course click on the notification bell to know when I put out a new video. So let's go ahead and hop straight into this. By the way, this topic was shared in last week's issue of Wealth Mastery. That's the weekly investor report that my team and I put out. So every single issue, you're going to get these kind of amazing investor tips. We also do the latest airdrops, the latest token sales, trending coin reports. Last week, DeFi Dad had a tutorial on how to make 578% APY using InstaDApp. So that's an incredible yield farming opportunity. Rect Capital is always coming with some top tier technical analysis, breaking down the stock to flow deviations. Last week, we have a weekly altcoin report. Last week, Jesse did a report on the DeFi application DeFin, which is a Polygon-based DeFi protocol. And we're always doing an interview with an industry leader as well. So last week, we had the team from Epic joining us to discuss their NFT solutions, working with some of the world's biggest brands. If you would like to start receiving this report to your inbox every single week, then click on the link down below me here in the description where you can sign up to become a member today for just less than $10 a week. Now let's go ahead and get into the topic here. So the markets are down. How do you make money? Well, one of the ways to make money is by yield farming. So if you're not into yield farming yet, you need to learn what it is. You need to figure out how it works. This is a mega hot trend. It's been a big thing since about mid-2020. when we started seeing different protocols initiate coin rewards for you putting liquidity into their protocols. So you can come in and borrow or lend or put in your liquidity provision tokens. It's a bit of a complex topic, and there's lots of different angles happening in yield farming. But the basic idea is this: you put in your funds and you get rewards back. Often these rewards are paid out directly using their protocol's tokens. So you might get, for example, some trading fees on Bancor as an example. You can yield farm over there. So you'll get a percentage of the swapping fees. It might be 2, 3, 4% APY for something like Bitcoin or Ethereum. But then you might get an extra 8, 10, 15% on top of that paid out in Bancor network tokens. So that's an extra incentive coming on top. You are yield farming in this situation. Lots of different farms out there, lots of different opportunities. The APYs can range from 5, 10% to the hundreds of percent for even some rather legitimate farms, all the way up to thousands of percent for the super degenerate, risky farms. So DeFi Dad has covered a lot of great farming options in the history of the Wealth Mastery newsletter. So lots of great info there, but just lots of great farms out there. You can use CoinGecko as well. Look at their yield farming section to get an idea of current farms, current rates of return. This is an amazing way to be earning money with your existing assets while the market is in this phase of turbulence, in this sort of accumulation zone, getting ready for the next big move. This is a great thing for you to be taking advantage of. The next thing is lending. So yield farming, that's using decentralized finance. It does require a bit of technical knowledge in terms of getting your wallet set up and all that stuff. It's not too hard, but if you're looking for an easier option, check out lending platforms. We have platforms like BlockFi and Celsius and Nexo, which make it just so easy to earn safe, simple, passive income. All you need to do is deposit your Bitcoin or deposit your Ethereum or deposit your stable coins, and you start making money. It's great. In fact, stable coins, I keep telling you guys, massively underrepresented in most people's portfolios. You can have these stable coins be earning some really, really good rates of return. So that allows you to not be all in the market all the time, have money to buy the dips, and have a great way to be earning 8.6% on BlockFi, for example, right? And I know you can get more with stablecoins in DeFi, but then we open up different risks like impermanent loss, smart contract hacks, et cetera, and I do use some decentralized finance platforms for yield farming, but I also use some lending platforms because it's just safe and simple and easy, right? Nothing's 100% safe. This is crypto, but in terms of the scale of risk, lending platforms tend to be a rather safer option for your crypto to start earning some, nice returns. So you can get more Bitcoin, you can get more Ethereum, get more dollars. It's nice. Next up, we have what is definitely not for everybody. And I say that because trading is not for everybody. I know a lot of people out there, they believe this idea that, okay, I'm just going to come in and I'm going to start trading and making money, and it's going to be so awesome. I see other big accounts bragging about their big wins. Of course, those big accounts rarely tell you about their losses, much in the same way that gamblers at the casino don't tell you about their losses. They only tell you about the time they won $100,000, not the $500,000 it took to win that $100,000. You have to remember that 90% of traders lose 90% of their account in the first 90 days, and it's approximate numbers, but it just gives you an idea of the odds that you're against as a trader. But if you can trade, if you have taken the time to learn about technical analysis, you understand risk management, well, then you can short the market. There's been a lot of great shorting opportunities right across the cryptocurrency markets. Lots of traders have been making a lot of money shorting the market. So if you understand how to do this, this lets you bet that the price is going to go down. And when the price does go down, you make money. So this is the thing. If you're a good trader, you make money if the market's going up. And the hallmark of a really good trader is one that can make money when the market is going down. Shorting is a great way to do that. Thankfully, of course, we have lots of great platforms for doing that these days, like Bybit and Femex or Binance. So many options out there if you want to be shorting the market. So, like I said, this is a more advanced topic, but if you understand how to do this, then it is a great opportunity in these, sideways or, rough, turbulent markets that we're in right now. The next idea is, of course, bargain shopping. And I know, it's you bought a lot at the top, and now you're looking at it like, oh gosh, this is really rough. My portfolio is down 50, 60%. Some of my altcoins are down 70, 80%. It's time to sell. It's time to run for the hills and get the heck out. When quite the opposite, you actually have the big money now accumulating, averaging into the market. A lot of OG investors, they're taking this as a time to accumulate more coins. That doesn't mean you have to go all in right now at this very second with all your remaining money. What tends to be the best method, whether the market's up or the market's down, is not to go all in at once, because then you run into this situation of you buy at an inopportune time. So as an example, if you had started dollar cost averaging in at $65,000, buying, let's say, $100 Bitcoin a week, right now you would be getting a lot more bang for your buck for that Bitcoin versus if you had simply gone all in at $65,000. Now you'll be dealing with the stress of course, your portfolio being down, not being able to buy more Bitcoin now that it's on a bargain. So dollar cost averaging in is a great strategy for a long-term situation. So right now, a lot of these assets are, massively down from their all-time highs. And look, let's just keep it real. Some of these altcoins are going to keep going down. That's just what happens, right? Some of these altcoins are simply not going to make it long-term. If you think about venture capital investing, essentially that's what you're doing with a lot of these token sales or these newly released applications and platforms. A lot of these are just not going to make it long-term. They're going to fail to get users. They're going to fail to deliver on technology. The team's going to exit scam. Gosh knows what happens. Lots of stuff can happen here. But for those fundamentally strong coins, we're talking your Bitcoin, your Ethereum, your Aave, your Chainlink, your Polkadot, etc., now is a great time to be averaging into those positions, doing some bargain shopping, right? And look, maybe the market goes down farther, well, you can keep averaging in, because if you actually understand a lot of these assets, then you understand that long term, the prices are going to go a lot higher. $65,000 was not the high watermark forever for Bitcoin. It just wasn't. Bitcoin's going to go to 6 digits. Ethereum's going to go to 5 digits. Chainlink's going to go over $1,000, etc. Think farther forward. And if you're thinking long term as an investor, right, not as a gambler, but as an investor, then you're going to look at this and think, okay, well, great. Here's an opportunity for me to continue averaging into these assets, accumulating more of them for the long term. Because I plan on still being an investor in this market in a year's time, in 5 years' time, maybe in 10 years' time. Where will those assets be at that point? The winning assets, Bitcoin, Ethereum, Chainlink, etc. Where will these assets be at that point? These are questions to ask yourself. And if those are the questions you're asking yourself and having those serious conversations with yourself about your long-term investment strategy, then you're probably looking at the current opportunity as a time to be cost averaging in. And again, don't put it all in today or tomorrow. Average in, right? That helps you get a good price over the long term. Next up, let's talk about staking. Staking, I know it's a bit of a tricky topic because realistically, when you're staking, what does that mean? It means that you're putting your coins up to get more coins back. So if you, let's say, bought a whole big pile of Polkadot at like, what did it get up to? Like almost $50 or something back in April. Let's just say $50 as a number. And now your Polkadot is worth like $25. You're down about 50% on that initial purchase. But if you're staking your Polkadot coins, well, you might be earning, 11, 12, 13% APY paid out in more of those Polkadot tokens. So if you're actually serious about investing in this as a long-term asset, then you have to be staking these coins and getting those staking rewards. And that provides passive income if you want to sell those coins when you get them. So let's say that you did, buy let's say 1,000 Polkadot, right? Now you're getting 120 Polkadot a year passive income. You can be selling that for cash, taking that money, putting in your pocket, taking the wife out for a nice dinner or something like that. You can do that with those staking rewards. That helps you during these bearish times ride it out because you have income coming in from these staking coins. Or if you simply believe in these coins long term, then great, you're just accumulating more of them by staking them. And of course, if you're bargain shopping, averaging into more of these coins, then it lets you build up more of these coins over time, essentially at a discount because you're buying them now, staking them now, with the long-term view that these coins are going to be worth significantly more in the future. So you're able to accumulate them now essentially for free by staking them. So it's really cool. If you're not staking your coins, you're losing money, you're crazy, you have to stake any coins that are stakeable. Absolutely essential. Now, let's talk about some non-crypto related ways to make money during a bearish trend. Buying stocks. I know, stocks are so boring, right? Actually, I think stocks are super exciting, personally. I know a lot of people out there are not super excited about stocks, but honestly, I'm pretty excited about stocks. There's some super cool stuff going on out there in terms of renewable energy or robotics or genomics or just so much cool stuff. Rockets. I bought some Virgin Galactic the other day just because I'm excited about space stuff, right? There's a lot of cool opportunities for making big gains. One of the things that really made me start paying attention to the stock market, because in 2018, 2019, I hadn't been investing in stocks back then, but started in 2020, building up a big stock portfolio for the long haul. But the interesting thing that I really started thinking about was that during that whole Bitcoin bear market, right, from the peak in 2017 right up until, of course, we passed to a new all-time high back in, December 2020? Was that we hit the new all-time high? It was December. During that whole time, the S&P 500 hit a new all-time high, I think 5 or 6 different times. So during that entire time, stocks were just raging. And they're probably going to continue to rage as, money printing and all that stuff continues going on. There's great opportunities in the stock markets as well. I know that a lot of crypto investors are 100% crypto. Why would you invest in anything else? Well, because I want to invest in something that's uncorrelated to the cryptocurrency markets, so that when we do have down markets in crypto, I'm not completely exposed and I'm not having my back up against the wall where I need to say, okay, well, gosh, gotta pay the bills this month. I gotta pay some, sell some Bitcoin in order to do that. No. I'm diversified. I'm getting some dividends in from my stocks. Of course, got some growth stocks that I hope are going to go to the freaking moon. Some of them literally space companies are very exciting. All this stuff, it's just super exciting. This thing, I got really excited about Bitcoin. I get really excited about Ethereum and a lot of the innovations happening in the cryptocurrency industry. But I'm also interested in and excited about a lot of other things that are simply not represented by owning cryptocurrencies. You have to get into the stock market if you want to start getting into some of those different areas. And look, there's some good dividend stocks out there too that are paying, between 5 and 8% for some dividend stocks for some pretty solid companies. That's a pretty attractive rate of return, right? For something that's essentially a non-correlated asset to the cryptocurrency markets. And I know you can get really good rates of return on your dollars. Just stick it all in BlockFi, get 8.6%. It's nice, it's simple, right? But this is a nice way to diversify away from crypto. Last idea here for you. This is kind of a brutal one, but perhaps one that you may not be aware of, and that is tax harvesting. If all else fails, all this other stuff, and you're just like, I'm being crushed here. Well, you can always exit some of your positions at a loss. Now, before you do something like this, please consult your local tax expert, because it's super important that you know exactly what you're doing and if this applies to you in your local jurisdiction. Some of it, for some of you listening, it may not be the case. But if your country allows for it, then you can actually offset some of your tax burden by selling some assets at a loss. That may be the right call, for example, for some of these altcoins that maybe you've lost faith in them. Maybe the altcoin has not delivered on the network effect or the technology or whatever else it might be. For some reason, your investment thesis on that particular altcoin has changed. It's okay to sell. It's okay to sell. It's also okay to sell at a loss. I mean, maybe some of you need to hear that. But it's important to understand that if you are doing that, take account of it, right? Do some tax harvesting. Maybe a situation where you actually save yourself quite a bit on taxes by doing that. Because imagine if you sold a whole bunch of stuff back when the market was pumping. You have all these great profits now. Of course, you also have a big tax bill. Well, this could help mitigate a bit of that tax bill. So something for you to think about. Anyway, those are just some different ideas for you on how to keep making money, how to keep the gains train moving during the down market, during this bearish trend in what I believe, of course, is still a bigger bullish market. But your question for today, what are your tips to keep making money during a bearish trend like we're currently experiencing in the market? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.